Well, welcome back, everybody. I hope you guys had a phenomenal weekend here and had a great trading week last week. Let's see what we can do to make this holiday shortened week a one as well. So as we focus, a couple key things to note. We are still sitting there at that all-important weekly resistance that I warned you about last week. That is clearly affecting what's going on with the trading environment. So as we're going and focusing right now, you'll see just how tight we are. This is really coiling up. To put this in perspective, look at how this has been tightening up the last several days. Really getting tight in there. And this is the SPY, so the S&P 500 ETF. So as we're taking a look at this, we had that big move up there a week and a half ago, and since then we are just coiling. So in part, I'm sure, as is done every year, the institutions are going ahead and monitoring the retail sales very closely. They're looking at, what people are walking in with as far as bags, what they're walking out with as far as the number of bags. If they're shopping from store to store to store, they're going ahead and taking a look at are they buying little things? Are they buying big, ticket electronics and whatnot? So to gauge the consumer confidence, the sentiment, and also what kind of retail sale it's going to be. So a lot of secret shopping going on right now as they're trying to figure out there if the retail's market goes ahead and makes sense or not. So as that's going on here, of course, we just came out of a spat of earnings there as well. So all of this is leading now. We had the big move, and now we're absorbing that move, and we're waiting for new information to come out. But this market, the way this is coiling up here, we've got this rising support. We've got this falling weekly resistance here. We got pinched in there pretty bad last week, as you can see, and now this week, as we're starting off, look at how tight that is, on a weekly chart. So that's the story right now, coiling up here and looking for a big move out of this area. So we're going to be watching that very closely here. And as far as some of the sectors that are being focused on, a lot of interesting ones here. If you've been following along the last several weeks in our custom sector scanning type tool, which is based on algorithmic scoring, not typical percent changes and everything else. So that's why you normally don't see me ever focus on these. We offer that for you guys, so for traditional sector analysis, you guys can still do that. But then the real meat and potatoes, what really drives the wealth charts, sector scanner, is the algo scores. And so if you look here, you'll notice that utilities and equipment, trucking, airports and air services. So a lot of this, you can imagine this time of the year, a lot of this is picking up with gifts and sending everything. It's always a busy time of the year. A lot of you recall what kind of delays you get in some of your services occasionally. So with that being said, I'm really paying attention to those sectors here. That's leading some pretty healthy moves in some of those areas and some of these different markets here. And then as we take a look at, so those are some of the best performing. Let's take a look at some of the worst performing. You've got in general technology and healthcare being some of the worst. So we'll be watching that, see if that starts to turn around here, especially technology. Be watching to see after the drubbing it's had, if it'll start to turn around. Be paying attention to the trends there. And then, like I said, keeping in mind what's hot already to find individual opportunities within those areas. Okay? So, big week ahead here as we're looking for us to break out of this coiled spring and keep in mind some of those sectors that we just talked about. And we'll be keeping you updated in upcoming videos. You guys have a wonderful night, and we'll look forward to seeing the upcoming videos. Take care, everyone. Bye-bye.